Good afternoon. Thanks for tuning in. You're watching Ask BQ on Bloomberg Quint Live, and I'm Navneet Saluja D'Souza. Well, if you've got any questions on equity, this is the perfect platform for you. Send us your queries on Twitter, Facebook, YouTube, and also on WhatsApp with Ask BQ hashtag. You can also call us now on 02245404141. In fact, you can write to us on askbq@bloombergquint.com as well. Before we proceed and start taking individual queries, just a quick look at what the markets are doing. We were seeing some bit of rebound, at least that's what the SGX Nifty in the morning was suggesting, but we're just about trading flattish, though we've recovered from the lower opening levels that one had seen in the morning. There have been multiple attempts to see a pullback, but I guess every rally has been getting sold into, but still we're maintaining that level of about 10,800 on Nifty. Sensex is up about 39 points in trade. The broader markets are underperforming. That's the Nifty Bank for you, which was down in yesterday's trade, is seeing some bit of recovery, but for the broader markets, they continue to reel under pressure. There are cuts visible across the board, at least when it comes to the broader index. In fact, the advanced decline ratio gives you a better picture of that, and once again, we are in favor of the declines as we speak. The Nifty contributors list will come up on your screen. Okay, and this is telling you which are the stocks probably which are capping the moves on the upside. So Reliance since last week only has not been contributing at all. Sun Pharma is down. That's the biggest index loser for the day. And Maruti Suzuki is dragging the index lower by almost 5 points. But clear support coming in from these private banking stocks today. So HDFC giving a contribution of about 20 points. ICICI Bank and Kotak Mahindra Bank are a couple of the other stocks. In terms of sectoral gainers, as I was mentioning, there was a short covering bounce clearly visible for these banking indices. So Nifty Bank is up 1%. Nifty PSU Banking Index, which fell about 5% in yesterday's trade, has recovered about 0.7%. But in terms of sectoral losers today, auto and pharma are not having a great day at all. Nifty Auto is down 1.6% in trade, and the pharma index, the losses are primarily led by Sun Pharma, which is down about 7% in today's trading session. So very quickly, I'm just going to take you through a couple of individual stocks as well. M&M Financial, Apollo Tyres and VST Tillers, which came out with its monthly sales number for August. The tractor sales were up this time around, and that's the reason why you're seeing that gain of 10%. And on the losing side, you've got counters like Ashok Leyland, Escorts, which continue to fall in today's session as well. The fall is between 5 to 7%, and also sharp cuts seen for HDFC AMC. Actually, you're seeing some profit booking because the counter has been trading around its all-time high levels, and Spark is the other one because of Sun Pharma falling. You've got Spark also seeing cuts of about 7%. So net no major movement seen. It's turning out to be a sideways trade. Let's start taking queries and invite our guest on the show. We've got Vikas Sethi of Sethi Finmart and Sameet Chavan of Angel Broking will be joining us in a while to address the technicals. Hi Vikas, good afternoon. And thanks a lot for joining us. The first query today comes in on Twitter. Prateek has written to us and he's asking ICICI Prudential, which has been outperforming the market in the last 1 month. What he wants to know, is this the good time to add the stock into his portfolio? So Vikas, I'm going to come to you. A lot of the experts who've been coming on our shows have been advising to buy the insurance stock. But if one were to choose one stock in that space to add in the portfolio, would ICICI Pru feature on top of your list?
Good afternoon, Navneet. No, as far as ICICI Pru is concerned, I've been also recommending this stock since quite some time from much lower levels. I like the stock from a long-term point of view. But if one were to choose only one stock from the life insurance space, I think the best bet would be an HDFC Life. However, ICICI Pru Life also looks good. The investor has already bought into the stock and or is willing to buy into the stock. I think one can certainly buy ICICI Pru Life at the current levels and use a staggered approach to be buying into the stock at every down tick. I like the stock. The space presents a tremendous opportunity. The sector remains under-penetrated, and that is being reflected in the strength which these stocks have witnessed. So I'm bullish on the stock, and I think we could see levels of 525 rupees on the stock in about a year's time.
Okay, so that's the view coming in on ICICI Pru. The counter is not doing too much, by the way, in today's session, but in the last 1 month, it's definitely given you returns while the index has been trading lower. So last 1 month, it's up about 6%. The next query comes in on Facebook, and this is from Clive Coelho, who writes to us, and he has a query on CESC. He's holding 950 shares at a price of 800 rupees. Let's just pull up and check what the current price of CESC is. It's way below, by the way, Clive's buy price. Vikas, I'm going to come back to you. Just a fundamental view. If somebody's bought shares of CESC at 950 and currently it's at 730 thereabouts, what would your advice be?
Now, as far as the investor is concerned, I would certainly sympathize with him. He's sitting on substantial losses. But at the current levels, I would not advise a sell on the stock. I think within the power sector, this would be one company which one can certainly hold on to. After the demerger, we've seen some crack in this stock also, in line with the meltdown which we've witnessed in the overall markets. But I think at the current levels, one can certainly hold on to the stock. I think we could see an upside of 10 to 15% over the next 1 year.
Wait for some bit of recovery. That's the advice from Vikas. Abhishek Panda writes to us on YouTube, and his query is on Sterlite Tech, and he wants a fundamental view. His average price of this one is at 170. He's been accumulating at lower levels, looks like, and he wants some expert opinion here. Let's just pull up the stock of Sterlite Tech, which has been under pressure in the recent past, because the overhang of promoter pledging is out of the window, but still the counter has not been able to recover. In fact, it's just been grinding lower. A shareholder who's been sitting at levels of about 170 to 180, what would your advice be?
Again, pretty disappointing stock. There were a lot of expectations from this stock because of the initiatives which the government had taken as far as digitization was concerned. This company was supposed to be a major beneficiary of that, but then for reasons which connected to the specific to the company, the stock has been beaten down badly. It had seen highs of around 350, 400 rupees, and from there on, it has come down to levels of 110. I think at these levels, one can hold on to the stock. The management is trying to come out of the mess which they had created by pledging the shares, or there were some corporate governance issues also within the group. So that is now being taken care of. So I think with the government's focus on digitization and the demand for optic fiber cables going to increase with the way Geo Fiber is also trying to expand its footprints, I think Sterlite Technologies can be held on to at the current levels, and I think one can the investor can look to recover his losses in the next, say, 1.5 years from the current levels.
Okay, Abhishek, so the advice is stay invested into Sterlite Tech because it does expect some bit of recovery to come by in the next 1 to 1.5 years for this one. I think Sameet's also joined us, so let's start taking some technical queries as well. Hi Sameet, good afternoon. Akshay Mittal has a query on City Union Bank where he's bought 200 shares and he wants to know what should be the strategy here. Let's just pull up the counter and check where it's currently trading. He has a query on DCB as well. Let me address City Union first. 200 is the buy price, Sameet. The stock's at 193. What would you advise?
No, clearly, stock has been consolidating of late. On Friday we saw a good surge in this counter. It was looking encouraging and was poised for some kind of relief move. But again, yesterday we saw the stock, declining from its important levels, and today also we are seeing follow-through selling. Overall, it is trapped in a range where the lower side, 190 would act as a major support level. So as long as it is, managing to defend this important level, one should stay put. But below 190, it is advisable to exit. So as of now, hold on, keep a stop loss below 190, and on the higher side, 200, 204. These are the levels to watch out for.
Okay, 190 should be your stop loss, Akshay, and that's the advice from Sameet. And one query at a time. If we have more time, I'll take the other query on DCB. The next one is on HDFC, and this is from Love Lab. What he wants to know, if one was to invest in HDFC from a longer term period, is it a correct time to buy the shares? Let's just check where currently it trades. Remember, the heavyweights have also started coming under pressure from the likes of HDFC, HDFC Bank, among the Nifty constituents. Vikas, a good quality stock in a correcting market tends to see some bit of profit booking, but would you advise someone to buy HDFC at levels of about 2100?
It's certainly one of the best quality stocks in our markets. The stock has done well, and in spite of the fact that the markets have clearly cracked, this stock has not done so badly. But as far as buying into the stock at the current levels is concerned, I would recommend that one can certainly buy the stock at the current levels, but should not put all his money at one go. One should be using a staggered approach to be buying into the stock because the markets look extremely volatile, And if some more correction sets in, then this stock is also likely to come down by another, say, 4 to 5%. So which would be a good time to enter the stock. So, but it's very difficult to time the market. So I would recommend starting for buying at the current levels, but using a staggered approach to be accumulating further.
Okay, use a staggered approach. Don't deploy your entire capital at one go. That's what Vikas is suggesting. In case if you see more correction, you can look to accumulate more at current levels. All right, that's for HDFC. Let's just pull up Ultratech as well. Remember yesterday when the markets were down nearly 2%, we had all the cement stocks coming under pressure, and Ultratech is still at about 38.64. No major recovery seen in today's trade. Ujjwal wants to know if this is the right time to buy this stock. Sameet, technically, what would you advise? And he's willing to keep the stock for the next 8 to 12 months. So is it the right level, or he should wait it out?
I'm sorry, Navneet, I missed out the name.
Ultratech.
See, clearly this has been one of the outperforming stocks. If you take a look at its performance over the past 2 to 3 years. However, since last 4 months, yes, stock has corrected a bit. But the kind of rally that we have seen over the past few years, some kind of price-wise as well as time-wise correction was quite overdue, and this is what we have been witnessing. One should stay put. The overall structure still remains bullish, and on the low side we see support coming in around 3600, 3500. So with a slightly broader view, one should stay put in this counter.
But would you advise Sameet to buy at current levels?
Yes, one should start accumulating in a staggered manner, say from current level up to 3700, 3600.
Okay, so that's the technical view coming in on Ultratech. Ankur Vinod has a query on Delta Corp. He's bought the shares at 220, and I think he's holding 350 shares of this company, and he wants to, he's willing to hold on for the next 2 years. Vikas, what would you advise him? This is another company which has been battling its own issues, some news around how the GST can be, should be calculated here, whether the company has paid taxes or not. But these are just reports, and the company has categorically denied all of this. But fundamentally, how is it looking, Delta Corp, if somebody is bought at higher levels of 220?
No, again, a stock which has been beaten down badly over the past year or so, but then I think the prospects for the company look pretty bright. And at the current levels, I would recommend a hold on the stock. I think we could see a bounce back in the stock as and when the sentiments in the markets improve. So my recommendation would be to hold on at the current levels.
Okay, hold on to Delta Corp at current levels. Manish has a query on IDFC. Sameet, on the charts, how is IDFC looking?
Stock has been consolidating of late. On the higher side, 36 seems to be a very strong resistance, and low side, stock is not willing to break its important support level of 3200. Volumes have dried up, so it seems that there is lack of interest in this particular counter. If this stock has to trigger any kind of optimism, the stock needs to surpass 36 on a closing basis. So if that happens and volume starts picking in, then yes, stock can head towards 3940.
Okay, that's IDFC First Bank for you. I think for this year as well, it's not fallen too much. The stocks just about remain flattish for this calendar year. Yeah, there you go, it's just down about 2%. Escorts is the next one where we've got a query. Somebody's bought at levels that we'll have to verify again. But I think in today's session, Vivek has a query. He needs a technical view on Escorts. The stock's down sharply in trade. It's down about 7 to 8%. Sameet, I'm going to come back to you. Auto stocks have been under pressure. Nifty Auto Index is also one of the biggest sectoral losers today, but particularly on Escorts with the 7% fall today, what would you recommend? What should be the levels to monitor here?
See, honestly, Navneet, since last couple of weeks, we have been bullish on Escort. Yes, stock did give a decent rally from lower levels of 455, 460 towards 518. So our initial target was somewhere around 518, but we revised it to 540, 542. But unfortunately, last couple of days, stock has given up all these gains. So one has to wait and watch, but still we believe that lower side 440, 435 would act as a support. So if anyone is holding it, hold on, and if anyone wants to enter, then yes, this decline should be used as a buying opportunity.
Okay, use the decline as a buying opportunity. Last 7 days, it's not done too much, but in particularly today's trade, the stock's seen some selling pressure. It's down about 8%. Let's take a query on L&T Finance Holdings, and this one comes from Krish Loya, who writes to us on YouTube. He's bought the shares of this company at a price of about 130, and he wants a long-term view here. Let's just pull up the stock and check where it's currently trading. Vikas, NBFC, if somebody is bought at 130, and that's L&T Finance Holdings, it's currently trading somewhere about 90, 91. Should he stay invested, or you would advise him to switch his investment?
No, again, Navneet, I would recommend a hold on the stock. Good quality company, strong management, a very strong pedigree. But the entire space is reeling under the liquidity crisis, which happened after the ILFS fiasco and the DHFL problems. But I think at the current levels, one can certainly hold on to the stock. Although the sector looks weak even now, and we could see further correction of around 5 to 10% on most of the stocks in the sector. But still, I feel it would be prudent to stay invested in the stock, because I feel it's a good quality company, and with the issues being addressed by the government recently, the sector should come out of the crisis which it has been grappling with over the last, say, 1 year or so. So my recommendation would be to hold on to the stock.
All right, stay invested, Krish. That's what Vikas has been suggesting. And there are very few NBFCs who've managed to weather that liquidity crisis which was triggered by ILFS in September last year. And besides Bajaj Twins, and a couple of gold financing companies from the likes of Manappuram and Muthoot have given you positive returns since then. All right, let's shift focus away from NBFC and take a view in Petronet LNG. Gobind Vijay, he wants a technical view here. He's bought the shares of this company at 220, and he's asking if he should look to book profits in a volatile market. Let's check where the current price is, 262. So somebody is at least making money. Congratulations, Gobind. But Sameet, do you think he should look to book his profits, or he can just place a stop loss?
See, if he's a momentum trader, then probably he can look to book out his profit. But one thing is sure, for the stock, has given a decisive breakout from its multi-year resistance zone. So from here on, it is poised for a strong move. Probably next 2 to 3 months, we would see this stock heading towards 290 or 295 as well. So minor dip would be a buying opportunity. But since if he's a momentum trader, he can book out, or he can trail his stop loss towards 260.
Okay, that's the technical view on Petronet LNG, and the other one is Reliance Industries, the heavyweight on Nifty, which is not participated. Remember, index was up 1.7% last week, but Reliance did not participate at all. And this week also we've seen losses coming about for Reliance Industries, currently at 1190. Gurpreet Singh has written, and he's holding shares at about 1225, and he's holding about 100 shares. Vikas, if he has a long-term view here, would you advise him to stay invested into Reliance Industries?
Yeah, of course. I've actually recommended this stock to be bought into from a long-term point of view. I think the recent AGM, in the recent AGM, the chairman clarified lots of things. They were talking about the company being net debt-free by March of 2021, which was taken as pretty positive by the markets, and we'd seen a sharp rally in the stock. And then I feel the new age businesses of telecom and retail, they are suddenly growing at a fast pace, and I think with the company talking about their contribution to the EBITDA rising to 50% from the current 32% odd levels, would certainly give it a premium valuation. And I think with the talks of the demerger of these businesses down the line, there could be certainly a lot of value unlocking. So from a long-term point of view, Reliance looks good at the current levels of around 1200. So I would recommend the investor to stay invested in the stock.
Okay, stay invested into Reliance Industries, and let me just take some queries from Facebook right now. We've got a query coming in from Avesh Kumar. He wants to know what should be the one-year target for HDFC Life and ICICI Pru. Avesh, we've already discussed ICICI Pru with Vikas, and he suggested to buy at current levels, but your query is a little different. So I'll take it to Sameet. Sameet, if somebody's bought stocks like ICICI Prudential and HDFC Life for the next 1 year, looking at the charts, what can be the target on both these stocks?
See, both these stocks have entered an uncharted territory, so sky is the limit for these particular counters, and the kind of outperformance they have shown over the past 3 to 4 months, considering the broader market destruction, it looks quite encouraging and promising. As far as HDFC Life is concerned, yes, it would be very difficult to project higher levels, but at least in the near term we could see this stock heading towards 600, 650. So these are the next possible targets as far as their retracement levels are concerned. For ICICI Prudential, it would be somewhere around 490, 500.
Okay, Avesh, hope we answered your query there. Rachit Mehrotra, staying on with the insurance space. Vikas, I'm going to come to you. Any thoughts on GIC RE? Would you advise to buy this one?
GIC RE, again an insurance company. I think the entire sector is looking good, and we'll have tremendous growth opportunities for each companies out there. Because as I was discussing earlier, the sector remains under-penetrated. We have only around 1.5% penetration in the sector, and which is going to go much higher. And if you look at, if you compare it with other countries, we are certainly hugely under-penetrated, and it would offer tremendous opportunities to the sector. So even GIC RE could be a stock to hold on to, and one can use a staggered approach to be buying into the stock if one has a long-term point of view.
Right, and by the way, that's a consensus positive view coming in on the insurance space from a lot of the experts who've been coming on our shows. And this is a niche sector. Also, now you get the chance to own these companies because they were just listed recently, maybe a year or 2 years back. Siddhant Sharma on Facebook has a query on Voltas, and that's a technical query. Sameet, he's asking for the next 15 days, what sort of technical levels can one watch out on Voltas?
See, we are seeing some wild moves in Voltas, and last week there was a breakout seen somewhere around 605, 608. Stock went up to 640, and again last couple of days it has come off sharply from mid size, but it has now retested its previous breakout point. So 600, 605 is likely to act as support, and probably in next couple of weeks we would again see the stock retesting 635, 640 levels.
Okay, 7 days, not done too much, and it's trading with cuts of about 1% today. Sameet, coming back to you on SBI, Satya Subhash wants to enter into this counter, and he's asking for some technical help. So on the charts, are the current levels good enough for somebody to take a fresh position in SBI?
In SBI, right?
Yes.
See, since last 3 weeks, it appears that the fall has been arrested, that has come from the high levels of 360, 370 in such a short span. And, this fall has arrested around its weekly 200-day moving average. So, 260, 265 is likely to act as a sheet anchor. With a momentum perspective, we are not advising this stock, but, those who are willing to give some time, probably another month and a half, then this level certainly looks good considering the overall risk to reward ratio. So keep a stop loss below 260. One can accumulate, start buying, and on the higher side 285 would be the first level to watch out for, and if that gets surpassed, then probably 300, 305 these are the next levels.
Okay, that's SBI, which has seen some recovery in today's session. It's up about 1.6%. The next query, Vikas, I'm going to come to you. Voice of the Lamb, by the way, that's the handle name on YouTube. He wants to deploy some money into the market, and he's identified few stocks. He wants you to choose one among them, and his time horizon is 10 years. So I'll name those companies for you. IDFC First Bank, Tata Global Beverages, HDFC Life, ICICI Bank, and ITC. Out of the stocks that he's highlighted, which one would you choose if he wants to stay invested for the next 10 years?
Now, for the next 10 years, from among the stocks which he has suggested, I think the best bet would be HDFC Life, which we had discussed earlier also. I think this is a sector which is having tremendous potential, and it would be a consistent growth opportunity for the next, say, 5 to 10 years. So my advice to him would be to select HDFC Life from among the stocks which he has suggested.
All right, so insurance all the way. Vikas once again chooses HDFC Life among all the stocks that Voice of the Lamb highlighted. M&M is the next one. Abhijit Kumaru has a query. He's asking, is it prudent to add the stock at current levels? I think he already has a position, and his average price is somewhere at about 610 rupees. Let's just pull up the current price. It's 506. Sameet, it's 100 rupees or 110 rupees below his buy price. What should be the ideal strategy? Should he look to average at current levels, or he should wait it out?
See, I guess wait and watch approach looks quite pragmatic approach at current juncture. Stock has broken its major multi-year support lows in the recent past, and now next important support lies somewhere around 470, 475. So in case if the stock gives a further decline toward this important support level, probably around 470, 475, that would be an opportunity to average it out.
Okay, that's Eminem for you. And the next query comes in from Abhishek Chauhan. He's asking, should he buy PNB at current levels or short it, or should he buy Tata Motors at 106 or short it? Abhishek, one advice, don't be a compulsive trader. There's no hurry in taking any position, but still I'll take your query to Sameet. Sameet, what trade would you advise on stocks like Punjab National Bank or for that matter Tata Motors?
We are clearly avoiding PNB considering its overall underperformance over the past many years. Tata Motors, yes, same thing. The only thing is we are not advising going short at current level. Although day in day out we are seeing correction in both these counters, but we are not advising any kind of fresh short positions at current level. Rather, wait for some kind of reversal. In case of Tata Motors, if stock gives a reversal beyond 116, that would be an opportunity to go long.
Stay away as of now, and the markets will give you a lot of opportunities to take fresh positions. Rain Industries is the next query on, and this one comes in from Mayank Papnai. He's been holding the stock at levels of 123 and currently the stock's 80, so he's lost about 30 to 33% is what he's suggesting. Vikas, and we often get queries on Rain Industries. There are shareholders who've bought at higher levels. What would you advise them to do?
No, again, a company fortunes of which have recently drastically changed actually. Most of the stocks in the sector like Graphite India, HEG, Rain Industries, they've been beaten down badly from their highs, and investors are stuck with them at higher levels. But I think even now I would not recommend to be staying invested in these kind of stocks, because I think it will take time before their performance again starts improving. It's a cyclical story, and it might take another, say, couple of years before they start doing well again. So my advice would be to book losses and switch to some other sector where things look pretty better, or pretty much better than what this industry is looking at.
Okay, so book losses into Rain Industries, and probably you can look to deploy that money into some other sectors as it takes time for the cycle to turn. Rain Industries last 1 month is down about 9%. Let's just pull up the chart of ICICI Bank. Nikunj Patel wants a short-term view on this one. Sameet, on the charts, ICICI Bank, which is up about 1% in today's trade, would you recommend taking any position here?
Yes, coincidentally, we have advised this to our clients also, half an hour back. Stock certainly looks good. It has given some respite around its 200-day moving average. So from here on, we expect the stock heading towards 4 and 10, 4 and 12 over the next few days. So yes, he can certainly go long at current level, keep a stop loss around 385, and target would be around 4 and 10, 4 and 12.
Okay, that should also answer Akshay Mittal's query, who's been holding ICICI Bank at 390. Sameet is saying the target can be 410 to 412, and you can place a stop loss of about 385. All right, we're running out of time. On that note, I would like to thank both our guests, Sameet as well as Vikas. Thanks for joining us and helping our viewers with your queries. Well, that's all that we have on this edition of Ask BQ. Remember, we're just a tweet, post, or a call away, so please keep your queries coming, and we promise to address most of them through our shows. For all previous episodes, you can visit our YouTube channel or our website, bloombergquint.com. Up next is Powerland. Stay tuned to Bloomberg Quint.